Welcome to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Here's your host, Grant Bledsoe.
Hello, everybody. Grant Bledsoe here. Welcome back to Grow Money Business. This week's episode is number 100. And as a matter of fact, we have a guest on this week who is one of the more fascinating conversations that we've had on the podcast. John Butler joined us this week to talk about small business health insurance and ways that businesses can reduce the costs of the health insurance they provide to their employees. John is a benefits specialist and has just recently published a book that's grown to number 1 on Amazon in his specific category. It's a very interesting topic, and John has a unique perspective on health insurance costs for small businesses and what you can do to reduce them in yours. I hope you enjoy it. Hey, everybody. Real quick before we jump into today's episode, I have been advised by my attorneys to remind you all that none of what you might hear in today or any other episode of Grow Money Business is financial, investing, tax, legal, fitness, or even relationship advice. It's content that you're free to use and deploy on your own terms. And before you take any actions on what we might cover in the show, I really encourage you to consult with your accountant, attorney, or financial planner. If you don't have a financial planner and think that you might need one, be sure to check out threeoakswealth.com to learn more about my firm's planning, advice, and investment services. John Butler, thank you for joining me today on the podcast. I appreciate you taking the time and sharing some of your wisdom on health insurance.
Oh, thanks, Grant. It's great to be here.
Now, for a long time when I had guests on, I would take a couple minutes and introduce them and read their bios and all of the above. But the reason I like to have guests on is for other people to share their insights. So why don't you do that for us? Could you maybe take a minute or two and just tell us about what you do, your background, your book, and what your subject of passion is these days?
Well, I grew up in Bloomington, Minnesota, which was at the time a small town in Minnesota, or a small town. And it's just, in fact, there was dirt roads, pictures of me of dirt roads. And now the population is about 140,000 paved and everything. But so I go way back. In fact, my first job was at the old Met Stadium selling pop and popcorn when I was 15 years old. And they tore that down to put the unprofitable thing called Mall of America in. And and that thing has just been, obviously flourishing ever since. So I got into the financial business in 1988, got my securities license, started getting into the benefits business in 1996, where I bought a block of business from a colleague of mine at Mass Mutual Companies. And then kind of worked that for many, many years. And about 7 years ago, I realized this health insurance thing is a big, ugly animal. And I took off on a journey that I never knew where it was going to take me, really. But I read a book called The CEO's Guide to Restoring the American Dream by a colleague of mine by the name of Dave Chase. And it was all about the problems within the health insurance, healthcare system that are wide and deep. But what it opened my eyes to is the more or less a groundswell of innovations that have been happening for the last 7 to 8 years, and including Silicon Valley. And about 3 years ago, I started to realize that the distribution channel is not really introducing everything into the marketplace for employers. For a host of reasons, that they're kind of attached to the insurance companies and their revenue streams and so forth. So I launched into writing this book 3 years ago, which I just finished a couple months ago, and it's now live on Amazon, called Health Insurance Sucks. We're just coming right out with it. And that's what got me here today. So
I love the title. I love the concept. And we've talked about this a little bit on the podcast about how broken the way that we consume healthcare is in the country. And there's any numbers you can look at. You can look at, the increases in premiums that individuals and businesses see year over year, year over year. You can look at per capita spending as a country on healthcare and compare that to other developed countries. Any way you look at it, it's in a really bad place. So after digging into this topic for a number of years, and after having written the book, what are some of your observations about healthcare in general, and give us the quick and dirty of how businesses can reduce or at least stabilize some of their costs?
Yeah, and when you talk about a broken system, the fact is today that 60% of all bankruptcies are due to healthcare bankruptcies, and 75% of those 60% had health insurance, which literally means that I could have been on your business plan and your deductible was $4,000 and I only had $1,000 to my name. Not only could I not use the insurance, but it was also coming out of my paycheck every month to the tune of about 2 to 3 times what a car payment is. And I can't use it. Of course, family premiums are up to where it's almost 2 times what a normal mortgage payment is. So, like I said, the biggest thing was access to the knowledge. I actually use in my book in the first chapter, I use a big hourglass as an example. Here's all the business owners around the United States at the top of the hourglass. Here's all the solutions that are in the bottom, and everything from Silicon Valley solutions to anything and everything that you can even think of. But there's a narrow little distribution channel that those businesses are coming down through that channel to get the advice from their brokers and brokerage firms. And I realized a lot of times the solutions that are out there, brokers can't even legally offer these solutions at the bottom of the hourglass. So I bring up 3 basic solutions in my book. The first one's pretty easy to understand, but people may or may not have heard of it. It's called a PEO. I don't know if, Grant, you've heard of PEOs before, but they're called professional employer organizations. Most brokers can't sell these. In fact, when I was a broker, if I'd hear one of my clients mention the word PEO, I would cringe because I knew I'm on my way to losing that business, right? So, that's a perfect example of why they wouldn't bring it up. But, these have advanced substantially over the years. Technology has advanced everything in life in general. And so these companies basically give an outsourcing of benefits to employers where they give you not only the health insurance, but life, dental, disability, workers' comp, payroll, and everything. And so it's like I've designed a Fortune 500 suite of benefits for you, Grant, and your company, and you can just hitch your wagon to what I've done and offer that to your employees. So that's one solution. And the really great ones are the high-tech PEOs are carving out the healthcare plan to allow people like myself to advise on just exactly what solution is right for the business. So you can still have a PEO program, but you can carve out and do the health insurance the way you want to do it. So that's one. The second one is what I call custom plan solutions. These are more designed for larger companies, right around 50 to probably 1,000 in size, to where they actually take the 4 elements that are in every health insurance plan has 4 elements that are cost drivers, and that's primary care, pharmacy, outpatient surgery, and hospitalization. And those are broken down into percentages. But pharmacy actually is becoming quickly about 50% of the cost drivers in most health insurance plans. What most people don't realize, and I didn't realize this at all, there's 3 pharmacy companies around the United States that control 80% of the United States marketplace, and that's Optum, Express Scripts, and CVS Caremark. So if you have a Cigna or an Aetna or a Blue Cross plan, and I asked you who your pharmacy benefit manager is, you wouldn't even know because they've already attached that program to one of those big 3 monopolies. And by just carving out just the RX side or the pharmacy side, we can save a company 40 to 60% by just doing that. But when you talk about reducing all four of the cost drivers, we're talking about a total reduction, somewhere between 20 to 40%. And now you've got control of your spending within your plan. I know that's a mouthful, but the thing I like about the custom plan designs is they're using incentive-based programs within each one of these. And I'll use an example for you. Let's just say, Grant, you work for me and you were on a custom plan design that I put together with one of the many brokers, consultants around the country that are doing this. A custom plan design has different arrangements with healthcare providers in the area that have contracted prices. So, for instance, if you needed a knee replacement, in our area, in Minneapolis, St. Paul area, if we were using a custom plan design, there's a great orthopedic firm called Twin Cities Orthopedic that has bundled pricing on their knee replacements. It's like $26,000. Now, you could go to other places within your quote unquote PPO network, and you might get charged $80,000. You might get charged $140,000. You don't even know, really. There's no top end of these prices. But if you went to Twin Cities Ortho within our custom plan designs, it wipes out your deductible. So these custom plan designs have concierge programs that you basically have a phone number right on your insurance card. And if you use the concierge program, they'll direct you to the highest quality first providers, which Twin Cities Ortho has the best ratings of all of them, at the most reasonable price. So that's the kind of dichotomy to this. All around the country, the best healthcare providers have the most reasonable, lowest cost, overall cost within their systems. I don't know if that makes sense to you, but it's built upon incentives, a custom health plan design, to make sure that you're going to the highest quality, most reasonable cost providers every time you go anywhere you need help.
Interesting.
So that's custom health plans. Any questions about that?
I've got a whole bunch of questions that come to mind, but maybe
Okay.
so we've covered PEOs and custom health plans. What was number 3 before we circle back and I pepper you with a few questions?
Yeah. Number 3 is, I call it in the book, cafeteria designs, because it's more or less where employers are allowed to give tax-free money or after-tax money to the employees and let them get their own stuff. I use the term cafeteria because, like, if your boss gave you money, you could get your own lunch each day. You'd have, $15 and then you could get what you want. That hasn't been done in healthcare for years, but there was a piece of legislation that was passed in June of 2019 that made these plans available on January 1st of 2020. And again, most employers don't know anything about this. It's relatively new. But these plans have started to already revolutionize the whole industry. And I use the example of the reason it's such a big thing is because if your boss offered you a car insurance plan and said, hey, he's going to pay for part of it for you, and then you found out at the end of the year that 3 people had DUIs and cracked up their cars, and your rates were going up by 15 to 30%, you'd think that was really, really wrong. Okay. You'd really question it, because in the car insurance world, we're not used to, thinking like that. Well, the healthcare industry has been like that for 50 years, Grant, and it's changing rapidly in this regard. So that's the last one, is the cafeteria plan design, which kind of, I'm a guy who likes to fight for the underdog, which I think the underdog really in this is the employees all around the country, and they have never really been involved in this. So you, Grant, might be an employee of mine that likes, you maybe never go into the doctor at all. You're okay with a higher deductible to save on your premium costs. And there might be another family that says, look, I want my deductible to be lower and co-pays for my kids going in for their visits, and they can customize it themselves. And you as a business owner can just give them the proper amount of money to help them do that.
Sure. Now, does the construction of the state marketplaces have anything to, because it seems to me that if you're offering some kind of cafeteria plan, here's some money, you go obtain the health coverage that makes the most sense to you, the
Right.
opportunity to do that through a localized exchange makes that a lot more viable. And I understand that this is there was a recent rule change as of 2020, you said, that
Hmm.
allows this kind of plan. It probably would have been hard to even offer such a cafeteria plan before the state exchanges existed. Am I off on that?
No, you're right on. The nuance of this is that if an employer contributes above a certain amount each particular year on an employee's behalf, it locks them out of using those exchanges. So this is really involved, but I'll use this example. Um, if I gave you $500 a month for you to get your insurance, if you went to one of your exchanges, and you're in Sacramento, right? If you went to one of your exchanges, they'd ask you if your employer is sponsoring a plan for you, if it's an employer sponsored plan. And then they'd ask you how much the contribution is. And that might lock you out of getting any discount on your health insurance through the exchange. Okay. So most of the cafeteria plan designs, they don't allow you to go to an exchange sometimes, but the premiums can be so much less expensive if they allow you to customize it yourself. And it's different. The prices are different within each state. I mean, in my state of Minnesota, an individual plan is 23% below what a normal group insurance plan is. And so Sacramento, it might be different. But, when you're a broker and you want to sell a piece of business in this marketplace, you want to sell something that's going to make you money. I mean, let's just face facts. This is, you're not working for nothing, right? But when I come to some employers of mine, and maybe they're low income people on a 20-person group, there's a little known executive order that was just passed a little over a year ago that said no one person can pay more than 8.5% of their income towards health insurance. Have you heard of that one, Grant?
I have,
Okay.
yeah.
So what that means to me is, if I'm a consultant that comes in and is consulting on your company's plan, and I realize everybody's pretty low income, the cafeteria plan probably doesn't make the most sense, because you're locking them out of that exchange in Sacramento or Minnesota from getting a huge discount on your premiums. So an easy, quick, and dirty for me is, what's your total payroll of the 20 employees? Multiply that times 8.5%, and then compare that with what you're paying on your health insurance. And that 8.5% is usually a lot less than what you're paying for your group insurance plan. So in that situation, I might consult on just, hey, I know it sounds weird, but you need to drop your health insurance plan, bring in a proper health insurance agent that can help your people go onto the exchanges and get their coverage. And that, I'm connected to all these people that can do all that. That's a lot of work. I think you'd agree. But at the end of the day, it's only one time a year you have to do this. And the people that I work that work with the exchanges can help bring it from A to Z across the finish line. So it's kind of complicated when it comes down to customizing on a cafeteria plan design. But the truth is, you might not even need a cafeteria plan.
Right, right. I think that it's complex. I think that any and all of this stuff is complex. It's just a very complex system. So you mentioned three different potential solutions that are being underutilized. And to frame that, you used this analogy of the hourglass, where we have all these businesses that need to obtain health coverage for their employees. You have all these solutions at the bottom, then you have this bottleneck that's separating the two, getting in between them because of access. Let's talk about that for a few minutes. Why the discrepancy? Why the bottleneck in the first place? What's really going on here?
Well, and my book talks about this in the first two chapters, and I'm a real big fan of economics. Macroeconomics is really what I'm most interested in. But the free enterprise system in the area of healthcare means that the insurance companies write contracts with brokers, and I've actually experienced this myself, Grant. If you're not doing things the way they want you to do things, they have the ability to end your contract at a moment's notice. So this happened to me way back in 2011, I believe it was. One of the big insurance companies who will remain nameless was advocating for what I was doing big time. They brought in teams of people and said, "Hey, we can help you. We can help you. We can help you." But it turns out that insurance company's rates were the highest in the whole industry here in Minnesota. So they didn't win the business. Now I was getting about maybe 3 to 4 thousand a month from that business, from that insurance company. And it just so happens a young guy, almost half my age, came to meet with me at lunch and said, "Your contract's done at the end of this month." $3 to 4 thousand was going away at the end of the month for me. So I wanted to tell that story because that's the way the insurance companies write their broker contracts. Okay. So I don't really blame the brokers, you know, for doing things a certain way, but the insurance companies sell something primarily. And are you familiar with what's called fully insured products, Grant?
It's been a while since I've thought about it. Refresh my memory.
Yeah. So fully insured means you're in a really basic form. You're just giving your premiums to an insurance company, and you're never ever getting it back. Okay, I know that sounds really really simple, but there's many different ways you can do insurance where you could get money back, but that's their highest margin product in the whole marketplace. So if I'm a broker that sells fully insured products, I might get a percentage of what you pay in premiums each year. You maybe, let's just say you pay $100,000 a year for your total for your employees, and I get let's just say 5% of that. Well, if your 100,000 goes up 15% next year and you're paying 115,000, and I've gotten 5% that doesn't change, I just got a raise for keeping your product the same.
Mm-hmm.
So there's really no financial incentive built in to the fully insured products for brokers to do a lot different for people. And they've also got these things called persistency bonuses that the insurance companies used to come back to me and say, "Look, if you just renew your groups with us, we'll give you a bonus, come March of next year." So if you renewed one of the insurance company's products, you got a 5% increase because it went from 100,000 to 115,000, and you got another 5 grand for just keeping it with that company. So if you want to talk about wrong-headed incentives, the whole system is set up wrong. They're supposed to be working for the employer and your employees, but I don't see it being happening that way at all. It hasn't happened that way for years.
Yeah, that's always been a very interesting component of any and all insurance from my perspective, because the licensing requirements, you have to pass an exam to be able to sell these products as a representative of any insurance company you might have one of these agreements with. But I'm a financial planner, and the way that the firm and myself are licensed and set up, we have a fiduciary obligation to act pursuant to the best interests of our clients. And if our clients don't feel that we did, they have legal recourse to come after us. And there is no such
Yeah.
obligation when you're an insurance rep, as I understand it. Is that right?
Yeah, I think there's what is it called? Accredited investment fiduciary or an AIF designation.
Yeah,
Yeah,
I
it's
have
more
that
or less
designation. Yeah.
it's like an ethical designation, okay?
Mm,
And as far as I know, there's no AIF type of thing similar in
yeah.
the insurance. Now, let me go a step above this. The insurance companies are dictated to by the states of what their particular products are, what even their rates. That sounds a little weird, but each insurance company has to file with the state of what their rates are going to be each year. They can't just decide what rates they're offering. It has to be approved by the state. The
Hmm.
state puts rules on these insurance companies that are really massive rules there too. So, I mean, and then the federal government put a law together that dictated to the states, the states dictated to the insurance companies. But here's a weird one. This is really weird. And I was troubled by this. If you're going to put together a fully insured or just a company that wants to own their own insurance contract, there's participation requirements by the insurance company to employers. It says you have to have a certain percentage of your employees participate in the health insurance, or you can't even get the contract. Now, if you're really just talking about really basic levels of understanding, why is that? Okay, if 50% or 75% of your employees don't even participate in it or don't want to, you can't offer that type of insurance, and that's either fully insured or self-insured, frankly. Okay. But the cafeteria design says, look, you're the employer, you're giving your people money, either tax-free or after tax, and you're out of those regulations. There isn't any participation requirement anymore. And that's why this cafeteria design is becoming more and more widespread around the country, where I don't think that many people actually know about it yet. But if I'm a broker and I'm working on your 20-person group, I sell you one contract to you and your company, and you give it to all your employees, and I make the money off of that contract. But if I go down the cafeteria road, I have to take care of all 20 of your employees. Now that's a lot more work. And in the design of the insurance world, as far as commissions, you usually make less money doing that too. So I make less money and I have to do more work. What sounds better to you, Grant? I mean, if you're a broker, so it's like, again, the incentives are all skewed different, and it's unnerving, frankly, to me, how complicated things can be here. So.
Yeah. So back to the hourglass. You have the more expensive, less business, less employee friendly plans that the insurance companies are making a lot of money on and incentivizing reps in a relatively perverse way to sell those solutions. And the better fit for a lot of different businesses that these three other solutions that are being underutilized relatively: PEOs, custom plans, and cafeteria plans. It's more work, it's less money. So what needs to happen? Is this an educating business owners to ask for these specific things? Is it finding a consultant that's not beholden to the insurance companies to explain it in a more objective way? Where's what are ways to close that gap, I guess, is a better way to ask the question.
Well, you hit on a couple of them right there. From my research around the country, I mean, out on the East Coast, there's a company that is focusing strictly on the cafeteria plan solution. Okay, and they do everything uniquely different. Okay, and they're not a big company, frankly, but if somebody comes to me and they say, well, that cafeteria plan sounded interesting. The nice thing about the way this is rapidly progressing is that there's companies out there like this company on the East Coast that already has a complete package solution, A to Z, and can do it for you. In fact, they're even working with what's called direct primary care doctors now, that those are doctors that want to operate outside the insurance system. And that's almost like, I consider that kind of the hub of almost everything that they're doing out there. Because if I was I'll give you an example. I did an interview with a company, a manufacturing company out here of about 140 employees, and we've got a direct primary care doctor here that wanted to pitch his business for the company. After I got done interviewing him, I was like, geez, why am I not using this guy? I was like, I'm paying a copay for every office visit. I only get to see my doctor for about maybe 20 minutes to 30 minutes each time, and he has to shuffle me out. So I went to this guy, and it was a subscription fee. I pay $75 a month to get him. But at the time, I was having a shoulder problem, of which I just got 2 cortisone shots in the previous 6 months. that I paid the cash price grant, the cash price of $200. Now I'm in the business, okay, but it was a learning experience for me. So the previous two was cash price of $200 outside the insurance completely. Dr. Engholm, Dr. Isaac Engholm here in Minnesota, he's got a DPC practice called Deploy Health. He comes out to my house, does a 2.5 hour workup on my whole health history and everything else. And before he leaves, he says, "Well, did you need another cortisone shot? Because I'm prepared to give you one here." Gives me the cortisone shot, leaves. Next day, texts me, not emails me, texts me the bill, and the cortisone shot was $11. So
Oh
even though
man.
that's the cash price, he explains to me that the offices, the healthcare facilities, they mark that up anywhere from 1,000 to 2,000% on their cash price. Only cost him $11. He basically passed through the cost to me and had me pay 11. I mean, that's remarkable, isn't it?
It is.
And
Yeah.
so that just opened my eyes up. This is only a year and a half ago that happened to me. These kind of things just keep on happening and have happened to me over and over for 3+ years. It's just the innovation is incredible. But I don't remember the original question now. Sorry, but
No, that's all right. That's all right. So these we were talking about these three different alternatives to traditional healthcare plans for businesses. And we were talking about closing the gap between
oh yeah, yeah.
right, so educating, or maybe looking at consultants who are working on a more objective basis, who are not beholden to traditional insurers and are heavily incentivized to sell those plans. I'm interested in other ways that we could close that gap. And I have a follow-up question, but maybe I'll save that until we cover this first. So if you're a business, you're trying to provide good healthcare for your employees, what do you do? Do you go out there and try to learn it for yourself? Do you find somebody to help? Where are you looking? Well,
Well,
they should read your book, I guess.
well, that was a good start, I think, of course. But in the last chapter of my book, and this has kind of been an evolving thing for me. I mean, I do work with businesses around the country, but I act as a super connector. That's what I call it in my book. Um, it's not me. It's all of the people that are around the country that are doing, for instance, custom health plan solutions different. In 60 days, I fast track them to the best people. I put a request for proposal together, find out what a business wants, first of all, which philosophy fits them best. And then I'll just put a 60-day program together to connect them to these people. And those people pay me if they get the business. Okay. So it's not like it's a big cost to an employer.
Hmm.
But that's what fascinated me. I mean, the last paragraph in my book, and it may sound kind of funny, but I'm not a big goals person, because you set a goal, and if you don't have a system behind it to reach your goal, those goals end up dying pretty quickly. What I was flabbergasted by is whether it's in the cafeteria, the PEO, or the custom plan designs, these firms have systems. Is that when you go into their systems, and you become a part of that, let's just say a custom health plan design, that East Coast company, they have a connection to direct primary care, that people meet with them online like this. Okay. I mean, that's not really that difficult to understand. But 2 years ago, who heard of Zoom? I never heard of Zoom, you
Yeah.
know? And
Yeah.
that's how quickly the technology is advancing everything. So they put together their own systems in each of those three categories that I talked about. And all a company has to do is to just be connected to their company and their system. And because it can be extremely complicated. If I was an employee, and this company, like I said, in Minnesota here, the 140 people, it's a machine shop. Okay, they go to work and they go behind their machines each day. Not only do I not know about healthcare, I don't want to know about it. All I know is
Right.
that it stinks. Okay, or the sucks word that I use in my book. Um, and try to make it better so that I'm not bankrupt because I don't have enough money. because my deductible's so damn high. I mean, that's all I really want. Okay. And employers control the purse strings on this, though. That's really the key thing is, they set it up, they pay for a pretty good portion of it on the premium side. They might even pay for an HSA or something, which you're familiar with in the financial world. So it's not the employee's decision. That's hard.
Yeah. Yeah, absolutely. So run us through if you're a business owner, when are you required to offer some kind of health plan for your employees? And do these options, the PEOs, the cafeteria plan, the custom plans, do those meet those federal requirements?
Oh, that's a great question. I mean, almost nobody asks me that question because the assumption is that those penalties, and you may be familiar with these penalties, Grant, but when the Affordable Care Act was put into place and rolled out in 2014, if you didn't have a plan that the federal government said you were supposed to have, you were penalized $20 or $2,000 per employee per year for not having the type of plan that they said you're supposed to have. That had risen by 2019 up to 2,500 per employee per year. The cafeteria plan design, that piece of legislation that was actually President Trump, was an executive order in 2019 and then rolled out in 2020. If you have that plan design, there's ways of completely wiping out that 2,500. In fact, all you have to do is to put in a certain type of cafeteria plan, and it makes sure that that $2,500 penalty is gone. So there's two different penalties. That one is the big penalty, and the second penalty is that an employer doesn't contribute enough to their employees' health insurance coverage. And there's something called an affordability test that these companies are used to doing now that are really the cutting edge performers around the United States. So they put in the right cafeteria plan. You avoid the 2,500 per employee per year. They make sure that you, as a company, contribute enough so that you avoid that second penalty, which is really not important to go into too much on the second penalty, but it's easy to wipe that out. So now you could be a company of 100, 200, 500 employees, and you have an opening to the cafeteria plan design that you didn't even know you had, because all you've been hearing, probably even from your CPA, is that, boy, if you don't want to run into that penalty, well, it's actually easy to set it up now to avoid those two big penalties. And so, but companies under 50 are free to do what they want according to the Affordable Care Act. And I just love the list of rules that people have that inhibits an employer's freedom to say, oh, you know what? I mean, in my world, I'm paying you to do a particular job for my company, and I can't do it a certain way. And I think that's really ridiculous. We could probably go on all day about freedoms in this country and how they're being knocked down in a number of different categories, but that's a whole nother topic, I think.
So the threshold there is 50 employees, right? So if you have fewer than 50 full-time equivalents, you are not required to have any kind of health coverage. Once you have 50 or more, at that point, that $2,500 penalty could apply.
It
Am I
could
understanding
apply.
this right?
That's what's called, yep. And that's something you have to meet a coverage minimum called minimum essential coverage. They call it a MEC in the business. So that certain type of cafeteria plan that you put in on an employer's behalf completely wipes out the MEC requirement. In fact, the MEC is in that plan. So you don't have to worry about that. All you have to do is to do a quick and dirty, affordability test with all your employees. And these partners that I have, they basically take your payroll, each employee that you have, and they have a literally a technology program that runs through an affordability test and says you're either going to, avoid the penalty, or you maybe need to contribute a little bit more to avoid that penalty. It's as
Sure.
simple as that.
Sure.
No, that's
Sure.
in the cafeteria plan world. The other two that I'm talking about, the PEOs and the custom plan designs, that MEC and all the affordability testing is already built into those plans. So
Right, right. So if I'm an employee of a machine shop and I don't know about health insurance, I don't want to know about health insurance. All I know is that it sucks and that the premiums keep
mhm.
going up on me. I would obviously like something that is less expensive. But if I don't know anything about health insurance, nor do I want to know anything about it, if my employer signs me up for a cafeteria plan and then expects me to take money and go find my own coverage using those
Mhm.
funds, what resources are there to help an employee in that situation? How are they getting across the finish line there?
Yeah, that's a good question too. Most employer plans now offer multiple solutions within their fully insured plan designs, the traditional model.
Hmm.
So there might be $1,000, $2,000, and $3,000 deductible, different premium choices, and maybe an HSA with it type of thing. That same thing can be done in the cafeteria design model. So the warriors that I work with, they have already set up a technology program that says, Grant, you just go onto the website, you'll see your $500 contribution that your employer is giving you, and you'll see three different programs that are designed for your, within your network that you chose and all the different things that you've designed yourself. But there's three different choices there, and you can just plug it right into that and sign up electronically now. So it literally works the same as the group insurance plan. It's just in the individual design world. There's one thing we haven't talked about that's a little bit more outside the lines of things, but it actually is an experience that my wife and I had in 2018. So we did have a traditional fully insured plan. The two of us, we were on an HSA plan with one of the insurance companies here in Minnesota. We're just a two-person group, $4,000 deductible HSA plan. But we got the renewal in about, I believe it was about June or July of 2018. And our two premiums collectively were going up to $1,800 a month. And okay, so now I could have gone down to the individual health insurance road, but being in the business, I was kind of aware of a lot of other things that were happening outside that world. And one of them is the health sharing programs that are out there. And have you ever heard of these before, Grant? And if
I
you
have.
have, tell me a little
Yeah.
bit about what you know about them right now.
So the health share, it's not formally insurance, right?
Correct.
It's a group of individuals, usually with shared um, like lifestyle choices. Like you see this Christian based. I can't remember what the name of it, but the name of it is.
Yeah,
But there's
Christian Healthcare Ministries. That's the
yeah, thank
first one
you.
we got onto. Now there's not a requirement for faith based organizations. There's about 15 of them now. But
Right,
yeah,
right,
you're
right.
exactly on the
So
right
a
track.
big group of people, you pay like a monthly, we'll call it a premium, to be a part of this group, and you're a cash payer that gets reimbursed for your expenses afterward from the group. The group is
Right.
not because it's not technically insurance is not legally compelled to pay you back, and if you get like in a wreck because you're drunk behind the wheel, you might not get reimbursed because that violates the code that you've agreed to adhere to. Um, we've got a couple clients that utilize these, and it's always given
Yeah.
me a little bit of pause because looking at the financial plan and the ramifications of some big event. Um, yeah, the plans themselves seem to be very stable, but the fact that they're not legally compelled to pay you back, it just scares the heck out of me. So
Yeah. And most
that's
people
about
would
all I know.
be well, and well, those have evolved over the years quite a bit. Just since the time well, I think some of them have been around for almost 30 years. MetaShare is probably the most widely recognized one, but not all of them, like I said, require faith-based commitments from people. Okay,
Hmm.
so there's everything under the sun now as far as out there, but um, there's two of them that have entered the business marketplace now, and neither one of these require uh, any kind of connections to a religious affiliation. each of these two companies come from a third-party administration background too, to where they actually they took care of the adjudication of claims for big self-insured groups previously to joining this. Okay, so they definitely know how this thing works. Okay, and my wife and I, back to that 2018 moment where our premiums are going up to 1,800 for $4,000 deductibles. We shopped the marketplace at that time, and we found one that was $500 of a quote unquote deductible. Okay, so here's the weirdness of it. You can't call it insurance. You can't call it deductibles. You can't even mention anything in that world, or you can get, in big trouble. Okay.
Right.
But we
Right.
trusted it enough at back then. So we went from 1,800 down to $344 a month. This is in the book on August 21st of 2018. On Christmas Eve night of 2018, my wife got a very, very bad pain in her left arm, I believe it was. Rushed her to the hospital at 11 o'clock that night. She was in the hospital for 4 hours straight. And fortunately, it was just an infection. She got treated and got released. We got the bill about 4 weeks later, 3 or 4 weeks later, for $6,750. Now, that didn't surprise me at all. Okay, 4 hours in there, testing and whatever.
Mm-hmm.
You can talk about the price of that for a second, but I called the hospital, Fairview Ridges Hospital, right near us here in Burnsville, Minnesota. I said, I'm calling about the bill. And she goes, oh, you know what? We don't have on record what your insurance is. And I said, well, I'm not actually on insurance. I'm part of a health sharing program. And she goes, oh, hang on a second. Let me get to my other system. She went to her other system. She reworked my bill and sent it out, and it was $3,125. $64.50 to $31.25 in 10 minutes.
Oh,
So
man.
that opened my eyes to this actually, and and we paid the 500, and the health sharing company paid the rest. But now this has advanced quite a bit to where now it's in the business community. You don't need a religious affiliation, and I personally am confident that and I trust them to pay past I'm on $1,000 plan right now,
Mm-hmm.
but our plan right now is $367 a month, and not every company would be comfortable with this. I mean, for instance, if they did a cafeteria design, they could offer to just do the individual health insurance if they didn't want to even go down the road of health sharing. But when just about 60 to 70% of the people out there qualify for health sharing, because you do have pre-existing condition questions.
Mm-hmm.
Some businesses have already gone down this road, and that company on the East Coast just placed 40 companies just last year with a combination of individual health insurance and health sharing, and their customers are wildly happy about it.
Hmm.
So I think that this is at the really beginning stages of this. But when you can get out of the healthcare business by going to a cafeteria design and disconnecting you from the contract and allowing your employees to get what they want, and maybe some of them choose health sharing. If I was a business owner and one of my people decided to go to health sharing for $367 a month as opposed to $1,800, I'd pay the whole damn thing. I mean, because it's really their choice. It's not your choice as a business owner. You're just opening it up to that possibility. So I think that possibly could be transformative. And you can imagine how nervous the insurance companies would be about this, though, because that really infringes upon their business model, doesn't it?
Absolutely. Absolutely. So talking through this, John, as we pointed out a couple times, if I've learned anything about health insurance at all over the time I've spent in the industry, it's that there are just layers and layers and layers of complexity. It's really complex.
I know.
And back to what we started to talk about earlier in the episode here, if we look at our country's spending on healthcare per capita compared to other
Mm-hmm.
countries, it is far and away more expensive here in the US. We're spending so much more per capita. From your
Right.
perspective, after digging into this and understanding it better than 99.9% of the rest of the population here in the United States, how do we fix that? What are your thoughts on where we go from here to bring that down to more comparatively reasonable levels?
Well, I'm not sure how much health sharing will flourish. I mean, I know that health sharing has advanced so much so that one of the health sharing companies out of the 15 that I know of has gone from 15 to 350 employees in the last year and a half. So that's one that an individual would have a choice on. Even if I was on your employer plan, I personally could choose that. I could opt out at open enrollment and I could choose that. But I think most often, I mean, it's, the employers around the United States, 60% of the people are under employer sponsored health plans, right? So that means the employers are controlling the financial strings or pulling the purse strings on this whole area or this whole space. And where naturally a lot of people would understand this. In fact, this one thing I didn't explain on custom health plan designs. This is really easy to understand. For every 100 employees, an average company will pay about $1 million a year. Okay. And a custom health plan breaks up that instead of giving all of that $1 million each year to Cigna, Aetna, Blue Cross, or whoever one of the big insurance companies are. They can do a custom health plan design, which breaks up their $1 million into two buckets. One bucket that's $200,000 that pays for all the fixed expenses on your insurance costs, and $800,000 where you pay your claims out of. Okay, so for every 5 years, a company usually has 1 to 2 bad claims years out of every 5 years. So if you think about the other 3 years that you put $800,000 aside, and your employees didn't have that bad, that big of claims, you maybe got back 300 to 400,000 as opposed to losing all your $1 million. That's about the easiest thing to understand in custom health plan designs that I could give you, Grant. It's like, now you haven't gone to the PEO, you haven't gone to the cafeteria. That's a big change administratively. You've changed nothing as far as your administration, but you've just had a philosophy that allows you to potentially hold on to a lot of that money that usually goes right out the door to the insurance companies. And aside from that, with custom health plan designs, you can design a plan. Now, that company in Lakeville, Minnesota, we designed it in such a way that took their 3,000 in single deductibles and 6,000 family deductibles, that gave them incentives in every single way to bring their entire program down to a zero deductible program. So potentially they got back some of that 800,000 that I talked about that could go out the door each year over 5 years. And their employees now have a concierge program that if they just go and just explore the different healthcare programs around the Minneapolis, St. Paul area that are designed to cost less with better outcomes, they'll pay zero deductible. I mean, you can't find a better switch to that, and it's a quick switch too. So for my money, and different brokers around the country do custom health plan designs differently. I won't go into and bore you with all of that, but suffice it to say that some brokers, I mean, I've got one down in North Carolina that does it a certain way that will almost assuredly save 40% on $1 million spent. That's incredible. And bring better benefits to the employees. That's probably the most aggressive broker that I have down in North Carolina, but there's a couple other ones, and they're all within the top 15 brokerage firms in the nation. And they just do things a little bit differently. It's like your business, you might work with certain, wealth levels of people, well, there's certain brokers that only choose to work with companies of 50 to 500. And there's other companies that choose to only work with companies of 1,000 or more employees. So that's another level of complexity. But really, my concept to connect them as fast as possible to these people is just connect them to the ones that qualify, based on the size of their company and their demographics. And then say, at the very beginning, which sounds the best, the PEO, the custom plan, or the cafeteria? Which is of most interest to you? And that's pretty easy to go through in about a 30 to 45-minute conversation with an employer.
Right, right. So as it relates to per capita spending on healthcare as a country, sounds like the gatekeeper is really the one pulling the purse strings on behalf of the employees, the business owner, as you put it. And a little bit of education here, either from a broker that is not in the pocket of a large traditional insurer, or some gumption by the business owner themselves to go in and get educated about this stuff, would really go
Yeah.
a long way and potentially save them a lot of money.
Yeah, I think according to SHRM, the HR national organization for HR people,
Mm-hmm.
I believe the average per employee spending per year has just gone over 15,500 per employee per year.
Hmm.
And in our world of nerdy healthcare people that just kind of really want to dig down and find out what we can do, I mean, it's a really easy calculation for most of these firms around the country to just do a calculation as far as what their per employee per year is, and then most of them can get it under 10 grand per employee per year. So that's a big difference, isn't it?
Absolutely. Yeah. Yeah. That's a huge difference. Well, this has been great, John. I want to be respectful of your time. Tell us a little bit about the book. It's called Health Insurance Sucks. Where can people find it?
Yeah, you can find it on Amazon. I'm happy to say that we just hit number one in our category just last week, which is fantastic. I did not expect that to happen. But just about any link to the national books out there. But Amazon is our choice. You can read the first chapter, almost the whole first chapter, for free on Amazon. That's what I like about it. And then you can find us at jb-benefits.com, which is my consulting site. And my book is on that page. But I'm happy to just try to connect people in the best way possible to the best solutions out there. But I'm really encouraged that it's just not all, doom and gloom here. That's what really the message in my book is, not the bitch and moan about the problems related to the system. Let's talk about the solutions. And they're here and they're real right now, I'm happy to say. So.
Well, that's wonderful. Congratulations on the success of the book. I hope we get a couple more readers on your behalf as a result of coming on the show. But if we did nothing else, then maybe educate someone or two, and you certainly educated me. I would call that a success. So thanks again for coming on, John. This has really been great.
Well, it's my pleasure, and congratulations on your podcast too.
Oh, thanks. I appreciate it. All right. Well, John Butler, everybody go read his book, jb-benefits.com. Did I get the URL right?
Yep.
All right. Thanks, John. We'll talk to you soon.
Thanks for tuning in to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Be sure to subscribe to the podcast on iTunes, Google Play, or wherever you digest podcasts to ensure you don't miss out on future episodes and announcements. And feel free to submit questions to growmoneybusiness.com.